Hey guys, this is Neha from Eagle Eye Forex and welcome back again. So today I brought something really interesting for you guys that will definitely help you become a better trader in the long run. So this video is going to be your ultimate guide to pullback trading strategies from basics to advanced level. Most of you might have heard of or traded pullback strategies before, but I bet that you have been trading pullbacks the wrong way. But no worries, today I'll explain 3 pullback strategies in the most easiest and simplest way possible so that beginners can understand each and everything easily. After some days, we'll teach you some more pullback strategies in the second part of the video. So if you don't want to miss the second part and the remaining pullback strategies, do subscribe to our YouTube channel and press the bell icon so that you get notified for upcoming videos. So in this video, you will learn what are pullbacks, how the pullback works, what is the difference between pullbacks and reversals, 3 most effective and profitable pullback strategies, pros and cons of pullbacks. So pullbacks in simple words are temporary breaks in the trends, or when the market is trending, the price goes against the trend for a short period of time and then it resumes back in the direction of trend or the main market direction with more volume and stability. So this short-term movement against the main market direction is called a pullback. You'll see pullbacks in both uptrends and downtrends. It's not easy to predict the trend before it happens, and if you enter the market without strong confirmation of the trend, you might lose your hard-earned money. So the solution to this problem is trading the pullbacks. The short-term breaks in the main trend gives you a second chance to enter the trending market, and it will also give you high reward to risk ratios and more confirmed winning trades as compared to other trading approaches. I'll explain how the pullback works and then we'll learn the pullback strategies. So let's do example of an uptrend. In this uptrend, the price started moving to the upside, and once it reached to a certain level, it bounced back opposite to the trend. The reason behind this opposite movement or pullback is that the buyers that were already in the market from the starting of the trend, they might have closed their positions because this could be the previous support or resistance level. So the bullish momentum is decreasing as the buyers are taking out their money and the sellers are getting in, resulting in the bearish momentum for a short time. I hope this makes sense to you guys. So after the pullback, the price finally resumes back in the uptrend, making the higher low. Now you have 2 options. Either you can enter at this level or you can enter when the price breaks above this previous high. Whether you enter here or you enter here, you'll need candlestick pattern confirmation so that you can have instant profits without any drawbacks. The same thing is repeated here again and again, making series of high highs and higher lows until the trend reverses. Now, how would you know if it is a trend reversal or a pullback? There are some basic differences that will help you differentiate between a potential reversal and a pullback. The key difference is volatility. Pullbacks are less volatile as compared to the reversals because they are temporary counter trend moments. Also, the reversals move deeper than the pullbacks and they break the series of trend. Just like in an uptrend, if the trend is about to end or reverse, the series of higher highs and higher lows won't be respected. So when you see a pullback is going deeper, breaking the previous highs, don't enter your position. Just wait for the reversal pattern and then enter at the pullback of upcoming trend. I broadly define this a reversal trading technique in one of my YouTube videos. Just check out the link in the description after watching this video. I hope the basics are clear now. Let's move to the pullback strategies. Pullbacks can be used in many ways, but we'll be learning only 3 of them today. The first way of using pullbacks is support and resistance, then EMAs and trend lines. I'll explain each of this strategy one by one. So this is an example of TJ. It's a 4-hour chart, but you can use any time frame because the pullbacks are formed in every time frame, every currency pair, no matter what's your trading style and strategy. So this is an uptrend market structure. Now I'll show you how can you trade pullbacks using support and resistance to have some quality trades. So look at here, we have a key area of resistance. Price broke this level and pulled back to the recent resistance, making it a new area of support. After the pullback against the main trend of the market, now the price started moving in the trend direction. After reaching a certain level, the price pulled back to where the previous high of the trend, that is of course the recent resistance level, which turns out to be a new area of support, creating a higher high. Again the trend is resumed. Price created another high and pulled back to where the previous area of resistance now turned into a new area of support. Now the process is repeated until the trend starts weakening. Every time a pullback is created, you get a chance to enter the market and trade within the trend. But for that, there are two options to enter and exit the market. Number one is to enter at the pullback when the price is turned into an area of support. You can enter with the candlestick pattern rejecting this level. For example, a hammer, a doji, or an engulfing candlestick pattern, etc. The second way to enter is at the break of the previous resistance level after the pullback. I personally like the second option because it gives high winning opportunities. Just enter at the break of area of resistance, set your stop loss below the support level and target profit either using 1:2 risk to reward ratio or according to the market structure. Let's do another example of pullbacks with support and resistance. So here we have a recent area of support formed. The price succeeded to break this level, forming a minor support level and then pull back to retest this support. So we can conclude that there's a high probability that price will continue to make a swing low. You could have entered here anticipating a strong bearish move. Now after the pullback, the price continued to downside and formed an area of support, or you can say a lower low, because this is a short-term downtrend market. Now the price pulled back again, but where? Of course at the previous formed a support level. This was the support which is now turned as a resistance level, and now for suppose you miss the first move, you have another chance to enter your positions at this pullback. Again the same thing is repeated. Price moved within the trend direction, creating another area of support, or you can say a lower low, and then pull back to retest this area of resistance, giving you another chance to take this opportunity. But before trading the pullbacks, look for a candlestick pattern confirmation, because if you are a beginner you might end up confusing the pullbacks with the trend reversal, so be very careful. The another way of using pullbacks is moving averages. While there are many different types of moving averages, the two commonly used ones are EMA and SMA, the exponential moving averages and the simple moving averages. I prefer using EMA, the exponential moving averages, especially for the pullback strategies. Okay, so this is CAD. The blue line is 50 period EMA. Now if we move our chart to the left, the market had been in a long-term downtrend. Two things clarified this downtrend. Number one is the market structure, the series of low highs and lower lows. Number two is the 50 period moving average. If you take a look at this chart, you will see that the market has bounced off the EMA several times. The price makes a retracement against the trend. It touches the 50 EMA and bounce back again. This retracement or pullback is giving you an opportunity to trade the market before the trend resumes. For suppose here you miss this move, instead of selling here, wait for a pullback toward the 50 period EMA, enter sells when the price touches 50 period EMA and starts bouncing off of it. You can confirm the exact entry and exit using lower time frames. Set your stop loss above the EMA. Now you might get confused with these fake outs. I'll tell you how can you spot that it's a fake out, not a potential reversal, in a couple of minutes. So here you can take selling opportunities every time the price pullbacks and bounce off the EMA. Just like here, you could have took sells and yet another winning trade in your hands. Now if you look here, the main market direction is changed, which is confirmed when the price crossed the 50 EMA and did a retest. Here retest is important to confirm the trend. If the retest doesn't happen, this might end up as a fake out. So the retest is important. After the retest, the price pullback continuing the reversal again made higher high and pullback to the EMA. So you can take buys when the price pullbacks to the EMA and starts rejecting it. Open up your position, set your stop loss below the EMA, and you are done. Repeat the same trade again with another pullback. Now you might have got an idea about the difference between the previous fake out and this reversal. So now let's see how could you spot fake out. It's so simple and easy. Just look carefully. The price broke this EMA but did not retest and continued to the downside. The retest is important. Same thing happened here. The price didn't retest and continued with trend. So whenever you see this type of scenario, wait for a retest and trade wisely. The third way to trade pullbacks is using trend lines. It's so simple and easy. Just identify the main trend and draw a trend line accordingly. Just like here, this seems to be an uptrend, so we just connect the higher lows using a trend line. After drawing the trend line, look for a pullback and then enter your position. So the price started rising and did the pullback at the trend line, shoot up again and then pull back to where, of course, at the trend line, and the same thing is repeated until the trend is over. Now it's not necessary that you'll get the move every time, because sometimes the trend line might not get touched and you can miss the move, and that's quite okay. You cannot make money with every market move. Now what you have to do is just enter your buying position at the pullback using lower time frame confirmation and candlestick pattern confirmation. So we just enter here, set the stop loss below the trend line and target profit to the recent level, like here to the recent resistance level, because there's a high probability that price will retest this area of resistance. In the same manner, you could have entered buys here or with every pullback, but the condition is that market must be trending. If it breaks below the trend line, you're not advised to take any entry. Look at here, this is a downtrend market structure. We'll draw a trend line to define the trend and mark the area of interest. Like the uptrend, price did a pullback to the trend line. Once the pullback is over, the main trend continues. Then after a strong bearish move, it's time for another pullback. You could enter your selling position, so when the price starts rejecting the trend line after the pullback is over, keep your stop loss above the trend line and profit target according to the market momentum and previous price action. As simple as that. As we are done with the pullback strategies, now we'll look at some pros and cons of pullbacks. Pullbacks give you greater reward to risk ratios. Pullbacks work with every currency pair. It gives you high winning rate, allows you going with the main trend. You can buy low and sell high. The cons are you may miss the opportunity because the price may not touch the area you are interested in. You may confuse it with the trend reversal, like here the pullback happened but it was not deep and the price didn't touch the 50 EMA. You might have missed the opportunity in this type of scenarios. I hope that the strategies are clear to you guys. We'll be discussing some more pullback strategies in the part 2 of this video. Hit the like button if you learned something new today. Before ending this video, I'm really excited to announce that we have started managing forex accounts as well. So if you are still struggling with the forex trading or you don't have enough time to trade, just contact us on Instagram or Telegram for account management. Until next time, keep learning and keep trading. Thanks for watching.